I'm not changing potential, but I would agree that the economy is doing very well. We also expect growth to be around 3%. Unemployment rate's already at 3.9%. We have the employment report this morning, and inflation's right at 2%. So we're exactly where we want the economy to be right now.
I always go back, Eric, and we get to do this at least once a year, and I go back and look at the old interview. We didn't have the tax cuts back then. We have them now. You thought we were at full employment at a higher rate than we are right now. Mm-hmm. While you've upped your forecast to 3% for GDP, have you also upped your outlook for where rates ought to be? I guess that rhymes, sorry.
Well, I certainly think that we should continue the path of gradually increasing interest rates.
Right.
So when we have an economy that's already where we want it to be, there's no reason to be accommodative. And we still have accommodative monetary policy. The only reason we shouldn't move it up more quickly is because we don't have that much inflationary pressure at this point. And partly it's a prevention to make sure that we don't have more serious inflation going forward.
Explain, we have the jobs report coming up at 8:30. Tell us how you will look at wage growth that would give you concern about brewing inflation.
First, one report won't give me concern.
Sure, right.
That we average over a much longer period of time and we look at a wide variety of statistics. But I would say that wages have been going up gradually. What hasn't been moving up nearly as quickly is productivity. So if you have wages going up slowly but continuing to go up gradually and productivity isn't going up, then you have a situation where you start having more inflationary pressure. Now, the most recent productivity report was a little bit better.
Yeah.
But if you take it over a longer period of time, productivity is still historically pretty low.
Over a long period of time, we've had wage growth about 2.7% year over year.
Yep.
I remember Janet Yellen, the former chair of the Federal Reserve, saying if wages grew with inflation plus productivity in the 3 to 4% range, that would not be inflationary. So would you be concerned about wage growth a percentage point higher than it is right now?
So I would be concerned if I expected that wage growth was going to continue to go up. So we have very tight labor markets. If we have growth going at around 3%, we're probably going to have the unemployment rate continuing to go down. That means labor markets are going to continue to get tighter. We're currently in an environment when I meet with business people, the leading question they ask is, what are we going to do about getting more workers? How are we going to be able to take care of the problem of not finding sufficient workers without raising wages substantially? And usually what they tell me is that they've already been doing things that will increase costs but don't increase wages for the entire workforce. But they're getting to the point now where they're going to have to actually be increasing wages more substantially.
It's not my employer talking to you about that, is it? No? Okay, so are you on board, say, for a couple more rate hikes this year? I'm interested in where you think we need to go. People have put that long-run trend or the neutral rate in that 2.5% to 3% range. Where are you relative to that?
So I think 2.5% to 3% is right. It's a range. We don't know precisely where it is. I'd probably be at the upper end of that range. And so we still have a ways to go. So I think gradually increasing over the course of this next year makes sense.
And I know the full answer to this is you'll make up your mind when you need to. If you had to guess now, would you say you need to go restrictive on policy? Does policy need to go above the neutral rate?
My guess is that if things work out well for the economy, and that's what I expect and hope, that we will be in a situation where we need to have a somewhat restrictive monetary policy over time.